The purpose of this video is just to walk through some servicing guidelines that have come out for how lenders are supposed to be helping homeowners transition out of these COVID mortgage forbearance plans. This applies to GSE backed loans, meaning government loans. So if your investor is Fannie Mae, Freddie Mac, or FHA, these guidelines apply to you. So within 30 days of a borrower's mortgage forbearance plan expiring, the lender is supposed to contact the borrower who is on one of these plans, and they're supposed to have a conversation that meets 4 pieces of criteria. Number 1, the lender is supposed to determine whether your hardship is temporary or permanent, meaning your reason for delinquency, the reason you fell behind in the first place, which as we all know for these is COVID, has been resolved or not. So if you are one of these borrowers who ends up on a call with a servicer, you really want to make sure that you're telling the lender that the hardship has been resolved if it has been resolved. You wouldn't want to be in a situation where you feel like it has been resolved, but the lender for some reason marks permanent hardship in the system, because that will make it more difficult for you to get one of these workout options. So they're going to try to be determining whether your hardship is temporary or permanent. The second thing the lender is going to be looking at is whether you have the ability to start repaying your mortgage. If you do, if your hardship has been resolved and the household income has recovered, you want to get on one of these workout options that will help you not fall further into default and not be moved to foreclosure eventually. And so the lender is trying to determine whether you have the ability to repay the mortgage. So if you do, then you want to communicate to that to them clearly. If you don't have the ability to repay yet and you're still kind of in the middle of your hardship, what you'll want to do is make sure you've exhausted all available options to extend maybe your COVID mortgage forbearance as far as you can. They just recently said that, people who haven't been on a forbearance plan can get on them now, even though we're going into November of 2020. And if you were on a 180-day one, you should be able to get another 180 days extended if that's what you need. So if you can't repay, work with them to see if there's anything else you can get, if that feels like a good option for you. If you can repay, you'll want to communicate that, because that's one of the 4 things the lender is trying to determine. So again, number 1, they're going to be like, is this temporary or has this been resolved? Number 2, the lender is trying to determine if you guys have an ability to repay. And number 3, they're supposed to educate you about all of the workout options. If anybody's spoken with their lenders in the past or work with them, this may or may not happen. For one, everything that's coming out right now is very new, so your representative may or may not even know what all of the options are. And lenders might have preferences about which options they prefer to put you on. I've gone through, the options available now. As we know, there's reinstatement where you pay everything. There's repayment plans where you start making your mortgage payment and you pay a little bit extra till you're caught up. There's loan modifications, and then there's a deferral or a partial claim option. There are other videos posted on this site to go over those in detail, but those are the main 4 options right now: reinstatement, repayment plan, deferment or partial claim, or a loan modification. And so the lender is supposed to walk you through each of those options and tell you what they are and whether you qualify for them and what it would look like. But you want to be sensitive to lenders trying to just shove you into one option. And so being informed on these calls, knowing what other options might be available to you, is really important, so you get to pick an option if you do genuinely have a choice between what's available to you. The 4th thing the lender is supposed to be doing on these calls is getting a commitment from you to resolve the issue in some way. You don't have to commit on these calls. If you don't know what you want, or you need more information, or you need to think, don't let the lenders pressure you into committing. It's best to become informed about all the various options, look at your financial situation in the present time, look at your financial situation in the future, and kind of figure out what's best for you before you commit. So if you get one of these calls from the lenders, that means you are nearing the end of your mortgage forbearance period, and they are once again trying to determine whether the hardship is temporary or permanent, whether you have an ability to repay, whether they can get you to commit to one of these options, and they're supposed to be educating you about your options. But always take responsibility for yourself. Don't rely on your creditor to be able to present the best options for you. If you come to a good option that you feel good about, then work with your lender to see what their specific requirements are to get on them. Thanks.